Hello, this is Running Robert, and today we're going to be talking about the Xeris Pharmaceuticals XERS first quarter 2025 summary. Today is the 9th of May 2025. We are in the thick of earnings seasons for small cap pharma, so a lot of videos are going to be coming out. But in this video, we're going to be looking at the bullish and the bearish parts of the quarterly report and kind of seeing what they need to do going forward. So I generally follow small cap pharma. I do games. I do a little bit of everything. So if you like what I'm doing, please like and subscribe. It helps a lot. And thank you. Disclaimers: I don't own shares at the moment, and that makes me sad because I did ride the stock up from $1 to $3 before selling, thinking, "Hey, that's awesome." Now, lots of regret. I'm an amateur investor, and any advice given should be followed by due diligence, and information given is valid for today, the 9th of May, and the slideshow will not be updated. But as always, new news, new slideshow. So let's just get into the numbers right off the bat. So a couple things that we're looking at, and we'll go through the numbers first. So Gvoke with about 21, Keveyis with 11 million, Recorlev with about 25.5, and 2.3 for other, which is about $60 million. So when looking at that compared to quarter four, there's about $60 million. And that's, you can kind of look at what is positive, what is negative. We see this a lot in pharma. The first quarter, like insurance has changed, a lot of stuff has, so that they were able to grow between quarters, or at least hold steady with total sales. It is pretty good because then if you look back at quarter one of 2024, you can see, hey, Gvoke was at 16.5. That's a $4 million difference. Keveyis 13 down to 11.1 or 11.4. That is extremely stable. The big one you're looking at is that Recorlev from 10 to 25. So if they can make another quarterly jump like that in 2026, and now it's going to be at like 40 million, well, then you're in really good shape. And then, of course, the others, no big deal. So really, we're looking at the quarter one to quarter one kind of numbers. And if we can get those same kind of numbers, another $20 million in revenue, we'll be in pretty good shape. Let's see. So, of course, we ended the quarter with 58.4 million. Of course, our product revenue was about 60. Operating expenses were about 63. Net loss was 9.2 million. Some of that was from interest payments, so pretty close. They do estimate, or they did tighten up their revenue from 260 to 275 million. That is tightened from 255 to 285. In 2024, the revenue was 203 million. So this is looking like a good positive growth. We do not have any more debt in 2025. We reduced it by notes just recently. I'll talk about that in another slide. However, we still have the 34 million in 2028 and the 200 million in 2029. And then after that, there's no debt. So that is 3-4 years away. So I think the company has plenty of time to kind of address both debts. You know, the 34 million I think is a lot easier to address than 200. I don't think it's going to weigh on the stock until we get closer, or if we see sales just completely lag out. So, three main products we're going to talk about, like Gvoke, again, they're in a very crowded market, but they are steady as she goes, you know, gaining a little bit of money every quarter, and it's a pretty solid amount of sales. So, we're okay with it. Keveyis, again, they should be teaching a master class in fighting off generics because there's a generic on the market, but they are able to continue to keep selling because of their patient team that they have created. So, just so you get more information, generics, they come in, they're cheaper, but there's no support behind them. What Keveyis treats is something that is good to have support. And you can see that a lot of people have favored that support and paying a little bit more than just getting the generic and having, you know, no support. So we're looking at that as pretty positive, and we think it's going to stay fairly stable for the foreseeable future. Because I don't believe any other companies are coming in with generics, and I don't believe the current companies are going to start making their own patient teams to try to get better sales. So I think we're going to be at just a stable amount of income. And then Recorlev, we're finally seeing that ramp up. Like I said, we went from 10 million at the quarter one to 25. If we can do that again, and we're making 40 million just of Recorlev at the beginning of quarter one, 2026, we're in really good shape. So, pipelines and partnerships. So, this company did make a flurry of deals that occurred, but the three that we're talking about, the deal with Amgen, that's been terminated. So, that is no longer, they've decided not to go forward with it. Unfortunately, is understandable. We have no more information about Beta Bionics and no information about Regeneron. There is absolutely nothing in the quarterly report at all about these companies. So that is a little bit concerning. They're still in their slideshow that, hey, we have these starting with formulation. We should get Regeneron news probably this year. That is my thought process. So we'll be able to kind of check it in or check it out probably fairly soon. So XP8121, so there's a key meeting on the 3rd of June. That is their investors meeting where they're going to be discussing their phase 3 trial and getting opinions and stuff like that. They said the phase 3 is ready. So phase 3 starts later this year, and we're looking at the second half of 2025. The results would be late 2026, early 2027. Now, depending on how early or late either of those come, approval could be, of course, late 2027 or somewhere in 2028. So I don't expect the trial to take a huge amount of time. But normally you give about a year's for clinical trials to continue. So that's kind of what we're doing. If they give us an updated number, I will provide that. Anything else? Okay, so let's talk about warrants first. So 5.7 million shares pretty much are all in the money, with the highest being at $3.22. That is the February 2027 warrant, which is 5.1 million. So most of the warrants are not due for a couple years. And yeah, we're in fairly good shape with that, because even at 5 million at a conversion to 3, that's an extra 15 million. So that goes towards that 2028 debt without a problem. I did say they finished all their convertible notes for April 2025. They were cashed in April. So there's no debt this year. And then the operating expenses were 63 million, but that could go up starting on the phase 3 trial. Well, that will go up. It's not going to be a could. It will go up. So we're going to have to see what that turns into to figure out how much they need. So yeah, I shouldn't have sold. I'm looking for an entry point. I don't know when I'm going to see one. And really that is because at $5.16, it's an $800 million market cap. Most of the time we say that break-even companies are about $1 billion. So we still have some growth, but not a huge amount. And really after that, the growth is really going to be the heavy lifting of XP8121. And if you are very positive on it, which I know a lot of you are, I think this company's fine. It is not a problem. I think the drug could be good. I don't think it's going to be a blockbuster, but again, I think that helps the company get to where they need to go and get to that easy $1 billion market cap at some point. So overall, I think the company's in a good place. I think the stock is fine. It's definitely something that if you want to invest in, hey, you could. You're probably going to be in good shape. And that is where I will leave this. So thank you very much for watching and listening, and I hope you have a wonderful day.